Algorithmic Strategy Update, Benchmarking Global Markets. MP3 Narration Script, updated 9 July 2026. Cosmic Algorithm Limited, Backseat Trader. Opening. This is the Algorithmic Strategy Update for Benchmarking Global Markets, updated on 9 July 2026 for Cosmic Algorithm Limited and Backseat Trader. Overview. The latest benchmark dashboard continues to show the strategy ahead of several major reference markets over the selected one-year comparison period. Cosmic Algorithm Limited is shown at approximately 62.31%, compared with the Nasdaq 100 at approximately 28.63%, the S&P 500 at approximately 20.56%, Euro STOXX 50 at approximately 18.70%, and Bitcoin at approximately -41.36%. The key message is not simply outperformance. It is that the strategy has continued to compound through a period in which market leadership has been powerful, narrow and volatile. Benchmark snapshot. The one-year comparison remains useful because the Nasdaq 100 itself has already been a strong benchmark, supported by AI infrastructure, semiconductors, memory, storage and selected megacap technology. Against that backdrop, the strategy remains materially ahead of the equity benchmarks shown on the dashboard. The comparison with Bitcoin also highlights a different return path. This is not a digital asset momentum profile. It is a systematic equity rotation process, operating inside a defined universe of listed stocks. Nasdaq 100 market context. Recent Nasdaq 100 news remains highly relevant to current portfolio behavior. Reuters reported that the S&P 500 and Nasdaq recorded their strongest quarter since 2020, helped by technology and semiconductor leadership. That supportive backdrop helps explain why exposure to AI-linked technology and chip-related names has been rewarded. However, the same market leadership has also become more fragile. Reuters has reported sharp semiconductor-led weakness, with investors questioning the durability of AI-related capital spending, chip earnings expectations, valuation pressure and the path of interest rates. In simple terms, the same leadership areas that supported the strategy's advance can also drive fast portfolio pullbacks when sentiment reverses. Recent portfolio pullback. The recent decline in portfolio value should therefore be viewed in context. A systematic momentum strategy will participate when leadership is concentrated in a particular market theme. It will also feel pressure when that leadership group sells off together. The current pullback is uncomfortable, but it is not inconsistent with the process. The relevant test is not whether every difficult week can be avoided. The relevant test is whether drawdown remains controlled, whether the model continues to rank and rotate objectively, and whether weaker names are removed as relative strength changes. Strategy behavior. The strategy is not attempting to forecast short-term news, semiconductor earnings, central bank decisions or daily Nasdaq direction. Its role is more specific. It ranks the defined universe using quantitative signals. It rotates towards stronger relative momentum. It reduces exposure to weakening names. It rebalances through a repeatable monthly framework. And it maintains disciplined portfolio exposure without discretionary overrides. Outlook for the months ahead. The constructive case for the months ahead is that AI infrastructure demand, data center investment, semiconductor earnings and liquidity continued to support higher quality technology leadership. The risk case is that valuations, crowded positioning, rate expectations or earnings disappointment produce further rotation away from the strongest 2026 winners. For the strategy, the practical conclusion is unchanged. Participate when leadership is confirmed, but allow the model to adapt if leadership weakens. Current example exposure. Current or recent example portfolio exposure includes AMAT, PANW, CLAC, NVDA and LRCX. These are examples of exposure only. They are not recommendations. Positions may change as the model updates. Key takeaway. The updated benchmark dashboard continues to support the same core message. Backseat Trader is built around process, not prediction. The recent portfolio pullback does not by itself invalidate the process. It reinforces why risk control, rotation and systematic execution matter. Performance should always be read beside risk. Past performance is not indicative of future results. Investing involves risk, including possible loss of capital. Further reading. For readers who would like to explore the strategy, methodology and supporting market analysis in more detail, additional content is available at Backseat Trader, at www.backseattrader.com. For the audio-visual archive, visit the Strategy Commentary archive. Video content is also available on the Backseat Trader YouTube channel. Prepared as a clean spoken word script for MP3 voiceover generation. No emoji included.